Thanks very much. Well, good afternoon to everybody on this International Women's Day. Welcome to you. I'd like to start by acknowledging the traditional owners of the land on which we are meeting today, pay my respects to elders past, present and emerging, and offer a very warm welcome to our Aboriginal and Torres Strait Islander friends, and especially our sisters with us today. A warm welcome to RegTech Association members and our special guests. This week has been very high on strong messages around themes of unity, inclusion, diversity, and with today being dedicated to women and those who identify as women. This has also been Mardi Gras week here in Sydney, and all this in the face of the geopolitical environment in Europe, our post-pandemic recovery, and now also in parts of Australia, catastrophic flooding. So our thoughts with those who are impacted by all of these things. And it's in the spirit of diversity and inclusion, and indeed RegTech, that we're setting out today to talk about environmental, social and governance impacts, or ESG. By way of background, about a decade or more ago, a thing called ESG snuck onto my radar. And at the time it was part of my work in the private equity and venture capital industry. And there was a program developed by the United Nations called the Principles for Responsible Investing, or known as the PRI. And this framework was introduced in my time working in that industry. And the real challenge in being part of an association at that time, as I was to engage an industry who possibly considered that ESG was simply yet another compliance burden that they had to worry about. Fast forward to today, I'm pleased to say that that industry has come a long way. And that's evidenced by the fact we actually have an investor with us today as a living proof that PE firms and investors are well aligned with ESG, and that some of that early work that I undertook a decade ago is now having a trickle-on impact through those investors and including down to RegTech. So today we have taken more than 200 registrations for this session from 16 countries. We've got 27 regulated institutions, 8 regulators, 6 investors, and pleasingly 59 RegTech companies, and that's quite significant. Because do I think we are there yet? We are definitely not there yet. We are just on the beginning of the journey, but the RegTech Association wants to be part of this vital conversation. We want to be able to assist and support our RegTech vendor members in particular and other institutional members to shine a light on ESG, help them to align, help them to have a new conversation. So I've asked some esteemed colleagues to come together today to give some new and contemporary views and perspectives on ESG. Now, in terms of the format today, we're going to start with a bit of a 101 and a bit of an ESG landscape. And then following that, I'll be joined by a panel of 4 people, including Peter Deans from Not Without Risk Consulting, Stacey Smith from Potentia Capital, Darren Cade from Arctic Intelligence, and Edzard Wesselink from BCG. And I will get them to introduce themselves a little bit later. But for now, I just wanted to talk quickly through some housekeeping on how we're going to proceed. Could I have the housekeeping slide, please, Hong? Thank you. If just as a reminder, if we could just keep cameras and mics off whilst the presentations are being done. So in other words, if you are presenting, that's okay. Obviously turn your camera and your mic on, but everybody else, if you could remain off, thank you. Appreciate that. All questions we're going to do in the chat, and I will do my best to answer them or curate from them. But I have also asked my colleagues on the panel, they can feel free to answer some of those questions directly. So if you've got a question to answer of a specific person and I'm not getting to it, please do tag the speaker and ask them to address the question. That'd be awesome. We are recording today, so nobody will miss out, and we will email that recording to you at post-event. We'll also be doing a quality poll during proceedings. If you could complete that, we'd really appreciate that, because how you're finding these webinars is very, very important to us. So without further ado, I'm going to start by introducing you more formally to Edzard. Edzard Wesselink is a partner at the Boston Consulting Group in their Melbourne office. His main area of expertise is helping financial institutions transform their culture and organisational structures to become more agile and adaptable. He's worked deeply with clients around the world, including in APAC, the Middle East and Europe. And as part of his work, he's seeing the impacts and opportunities for ESG at the coalface. And so we could think of no one better than to come along and actually give us a bit of a 101 and tell us a little bit about the landscape as you're seeing it right now. So I'll hand to you now, Edzard. Thank you so much.
Thanks a lot, Deborah. I'm very excited to be speaking to you today. My slot is officially scheduled for around 15 minutes, but I typically find that in these settings, the conversation and the panel is really the most important. So what I'm going to try and do is really stick to around 10 minutes to give you a very quick run through of the 101 of what we see around ESG and how it is relevant for you as RegTechs. And I'll touch on some themes that will line up for the discussion and the panel later. So first of all, where to start? So what is ESG? The ESG 101. So ESG is short for environmental, social, and governance. And what it really stands for is a number of norms that businesses self-impose to a degree beyond legal standards around these different themes. Although what we're seeing more and more is the legal framework in countries is changing, where a lot of these self-imposed standards that are created are becoming laws in different countries as well. So if you look at the three big groupings here, environmental really touches around nature use, resource conservation, plastic pollution, other types of recycling, and of course the very big one that's on everyone's mind currently is climate commitments and net zero commitments. When you look at the social bucket in the middle here, what we're talking about, first of all, and that's very thematic for today, is gender equality and gender balance throughout businesses. And that's reflected in representation and in pay, but also in product design and servicing. But we're also talking about LGBTQI plus related issues. We're talking about minorities and representation and support for minorities in your business. And we're also talking about local community support and how businesses are embedded and make sure that they don't just deliver commercial, but also social support to the environment around them. And then really that last bucket, governance, is a grouping of different things around basically being a good and transparent citizen and make sure that you run your business in the right way. So that's about transparency, clear anti-bribery norms, anti-corruption norms, and conflict of interest norms. And that bucket, overall speaking, summarizes really an incredibly broad range of topics that you can think about that basically say, be a good corporate citizen and do the right thing for the environment, for the people around you, and in how you operate yourself. So how is this relevant for you as a RegTech? So what we see is that abiding to environmental, social, and governance principles is valuable in 4 different ways. A big number one is around attracting talent, and we'll see that on the next slide, which is more and more employees think that is incredibly important that the people that they work with at their company and the philosophy of the company is aligned to their underlying principles. And we're seeing a gradual shift in the mindset of how people think about employment. So actually attracting talent, and especially top talent, ESG related factors and how good your business is for the world is increasingly a talent attractor. Then the second factor that's very relevant is attracting and retaining investors. So if you as a business want to make sure you have access to funding, more and more investors are looking at environmental and sustainability and governance norms in deciding how they allocate their capital. And having that open access to capital is very important, of course, if you want to grow your business. Then there's another factor here around vendor relations. So more and more large companies, and I mostly work with large companies, so I see this from the inside, are thinking about how can we make sure that the public norms that we state, that we translate that to how we do business with our suppliers and our vendors. So they're increasingly taking an ESG related lens to how they select people and businesses they work with. And all of these factors are relevant internally for you as a business to say, how do you structure yourself to make sure you're attractive? Then there's a outward component as well, which is there's a lot of product and commercial opportunities around this space. So you as RegTex have an incredible opportunity to help large companies who increasingly are getting all sorts of additional regulatory burdens around reporting on their ESG related factors, doing public commitments around them, and making sure that they have the right data to back that they are actually doing what they're committing. So this is not just relevant for you to think about how should you set yourself up and run your business, but also what commercial opportunities does this open. So I'd like to do a very short mini deep dive into the first two factors. The first one around attracting talent. So we've recently done a large global poll of around 200,000 employees and cutting the data and looking at what they find relevant in order to make decisions around their employment. We see a market change over the past couple of years. I also personally see that in the recruiting conversations I have with people who are interested in joining BCG. More and more people are voicing, what are you as BCG doing in this space? But we also see it back in the data. So if you go to the next slide, what you see there is around 70% of employees that we poll say that they find it very relevant and important to know what a business is doing around ESG. And only 30% say they're neutral or not really interested in how companies think about ESG. And what we see is actually 15% of people, which seems like a small number, but is actually a full sixth of the recruits you're going to talk to, say it's actually a key factor in their choice of who they select. And that number is trending up over time. And moreover, what we see in the higher talent, more specialized skill buckets, that number is markedly higher. And then if you look at people that say, I am open to considering a different job, around 35% of those say that the status of the company they're working with around ESG and the norms they upheld is a factor in their decision to stay. So it is relevant for people to understand, are you on their radar? For some people, it's actually a key factor in their choice. And once they're there, it's actually a retention factor. So across all these dimensions, it's really important to look at ESG as attracting a possibility to attract talent. Now, if you go to the investor lens on the next slide, what we see there is there's just an incredibly rapid growth in the amount of funding that is globally invested in ESG-related funds. And there's specific different definitions of it, but there's something called ESG integration strategy, where ESG is an integrated lens in the decision-making around funds under management. And in that specific bucket, we see a 25% annual growth rate in the amount of funds under management in that strategy. And we see this back in the data. It's massive. Currently, around 35% of all the investments globally are in ESG-related funds. But we also see it in the public trends. So if you think about BlackRock, for instance, and Larry Fink with its hugely influential annual investor letter, the last couple of years, he's been beating the drum on ESG. He's been very big on climate, but more ESG broadly, and saying, this is the direction we as BlackRock are heading. And of course, BlackRock, as an institutional investor, the largest one in the world, is setting the direction for public investment. But what we see is it's not just public investment that's heading in this direction. We also increasingly see private investments starting to take interest. And we're seeing this translated, for instance, in you've got an organization called the Net Zero Investment Alliance. It's an UN-based alliance that is trying to define norms and standards around what is ESG investment and when can you count an investment as ESG related. They've started defining this for public investments, but they're currently developing norms around when and how can you define PE related investments and other non-public investments as ESG related. So this is really a trend that is sweeping investment as well. And it's important to keep this in mind as and when you're trying to attract funding for your own RegTech. So wrapping this up, what does this all mean? So when you think about ESG, one way to think about this is going beyond the basic minimum norms that are publicly set and maybe not taking into account purely financial considerations. But what we see as the flip side argument is when you look at these trends, the companies that are most successful are the companies that take this ESG lens into mind. So we've got some studies that show screening all the global companies around their ESG scores and their norms, that the ESG companies that score high on ESG have a lower cost of capital and they on average outperform the market. So ESG, rather than being this thing that is bolted on because you want to have a public consciousness, increasingly is an essential way of driving your business and making sure you are doing the right thing, not just for you and the world, but also for the people who invest in you. And I think that's captured on the last slide, which is when you think about ESG, we know these trends are going to increasingly grow over time. And a lot of the things that are currently voluntary norms will translate into legal requirements. You already see that in the distinction between, for instance, the Australian laws around climate versus the UK laws around climate, which are maybe 10 years ahead of the curve for us. We know this wave is coming. So what we would encourage all of you is try and be ahead of the wave and catch the wave. Start to build the capabilities right now. Invest in the products right now to make sure you're attractive to large businesses that need to do the work around this topic. Make sure you're not caught off guard when vendor norms are changing or when it's suddenly really hard to attract talent if you don't have the right story and the right public commitments around what you do in ESG. And with those closing notes, I would like to, or actually opening notes, I would like to see if we can pivot to the panel and start to see if people can go deeper on some of the topics that I just touched on.
Thanks very much, Edzard. And so in the spirit of riding the wave, if I could ask the following people to turn their camera and their mics on, and we'll get underway. We'll get underway with the panel. So first, I'd like to ask Stacey Kelly from Potentia Capital, Peter Deans, Not Without Risk Consulting, and Darren Cade. There we go. We've got them all online. What I'm going to ask each of you to do is actually, if you could just introduce yourself and actually tell us a little bit about your role and how your role relates to ESG, and then I'm going to ask you each a specific question. Now, just so for everybody on the line, we're going to keep this pretty bright and breezy. I do have some predetermined questions for the panelists, but I'll rely on you to feed some questions into me via the chat. But also, what was pretty evident when we did a briefing call a week or so ago, there's no shortage of good conversation to be had around these things. So I will let some of it go a little bit organically, but I promise that we'll all be out of here at 5 o'clock on the dot. So I might start in the spirit of riding that wave that Edzard has just put us on. And in Sydney at the moment, it feels like we're all on top of a wave right now because there's so much water around. I'm going to start with our investor in the group, Stacey. Welcome to you, Stacey. Could you tell us a little bit about yourself and then your role at Potentia Capital, and then I'll throw my first question to you.
Okay, great. Hi, everyone. My name's Stacey Kelly. I'm General Counsel and ESG Officer at Potentia Capital, which is a private equity firm and probably the only specialist tech-focused private equity fund in Australia and New Zealand. We currently have about 8 portfolio companies in our Fund 1, which was a $450 million fund, as I said, with a focus on tech and tech-enabled companies. And we're currently raising Fund 2. Before that, I was spent a decade at Archer Capital, which is a more generalist PE firm as their general counsel. So I think a bit like Deborah, I've spent the last 10 years thinking about ESG through private equity and environment. And I think what's really exciting about it is I think historically people have just looked at it through a normal risk lens as opposed to an ESG lens with both its risks and opportunities.
Yeah, that's great, right on the money. So that one of the things, Stacey, that you know, that decade ago was everybody said, oh my goodness, isn't this just another compliance regime? Isn't this just another compliance regime that is really just going to burden me with having to answer all these questions, like on my next procurement thing or on my next fundraise or whatever the case is. So can you, and going back to what you just said a minute or so ago about there being opportunities, how can we impress upon people on the line today that they should look at this as an opportunity rather than a burden?
Yeah, I think I also do compliance and AML for Potentia, so I can say that it's just not another compliance regime. And I think that's because it just affects every aspect of the business and it's just all encompassing. And I think it's just changing the way we consider risk and opportunities. And I think going back to some of those investment opportunities that was spoken about, obviously there are the impact funds, but there are other investments where it's really considering it at a due diligence stage of looking at a particular company and what the ESG focus is and almost benchmarking it with a view of improving. So I don't think that there's necessarily, for lots of investors, they don't expect that you will only be investing in companies where this is correct or there's no room for movement. I think that they're very focused, and we certainly are very focused on looking at where the company stands now and what you can do in relation to all 3 of those aspects. I think, you know, a lot of the focus is on environment at the moment because it's very easy to work out your carbon footprint. And maybe from a tech perspective, it's probably less of an issue if you've only got servers as opposed to manufacturing plants. So I think it's sort of the social and the governance aspect as well that's very important. And as I said, I think it impacts the types of companies that you look at, what you do with them, how you consider exit. So I think it's just, it can't be just looked at by one aspect of the organisation. It really has to be across the board in everyone's thinking.
Yeah, that's a really good point. I might move to you now, Peter Deans, and I know that you've got a bit of a helicopter view of, but you also have direct experience in being a chief risk officer of a bank. So what are some of those institutional perspectives on ESG that you can share with us now with some of the clients that you're working with?
Thanks, Deborah, and I was pleased to hear we're going to be bright and breezy today as well, because for those of us in Sydney, it's definitely far from bright and breezy. Yeah, look, I think it's as you touched on with our briefing call and in every one of these forums, it's a little bit of where do you start with ESG, and I know you sort of gave away a bit of your work history. I mean, I sort of go back to 2003. I was working at one of the major sort of big 4 banks here, and we started to look at the Equator Principles as I was heavily involved in mining and project finance, and it was all about I think as someone touched on earlier about doing the right thing, and it was very much from a financiers basis, ethically, based and sound, prudent financing of projects which weren't causing damage to the environment. I think looking back then, it was really, very much sort of good corporate responsibility, good corporate behaviours. I think it's sort of ESG has really sort of seen the convergence of that sort of concept right across the board, and so it's gone just beyond corporate responsibility. I think it's clearly embedded now, certainly in the institutional side, and I'll come to what I see as two sides of the mirror here. It's really become enshrined in. It really is expectations all around stakeholders, customers, suppliers, employees, as Ezard talked about, regulators, and I'd endorse his observation that whilst some of this may seem to be optional at the moment for less regulated or smaller businesses, I think brace yourself for, unfortunately, a wave of regulation in this area in the years ahead. I think where it's got to now is it's a combination of, if you want access to debt or equity finance of any substance, you're really going to need to steer into, again, as Ezard said, more around your sustainability strategy, how your business is actually organising itself, what its business strategies are, what it's doing, what it's not doing, to really, put forward a profile which is acceptable to institutional debt investors and equity investors. And I'd probably even go further and say it's partners now. I think a lot of the business partners, and Deborah talked about the vendor questionnaires, I mean, they're really looking to sort of, understand how good a fit you are with the business strategies of your organisation. And if you're part of their supply chain or part of their ecosystem, do you have the same values and standards and way of doing business right across ES&G? I think from the corporates, they have all the challenges of trying to organise themselves. And as we know, as you get a little bit larger, people become a bit more bureaucratic, and becomes actually quite hard to sort of move quickly and be nimble in this area, particularly when you're dealing with uncertainty. And ultimately, we still have quite a bit of uncertainty on, what good looks like, and even the governance side of things. Whilst in an AML CTF environment, for example, or some of the regulatory compliance areas, there is a fair bit of black and white, and what good looks like. If you move into less regulated industries, or the regtech or startup world, I mean, there fortunately is not a lot of regulation, but that also means it's very hard to define what good looks like in some of these areas as well. And I think this is where, for regtechs over the next couple of years, it's a matter of sort of finding your feet a little bit to sort of work out, well, what do you actually need to do? That does depend on the size of your business and the nature of your business. And then, as I think Stacey touched on, there are enormous opportunities here. And I think irrespective of whether you're a smaller entity, larger corporate with existing business practices, enormous opportunities to take advantage of new markets that may open up. And green finance has been going 5-6 years now in Australia in a consumer sense. Lots of opportunities there. And I think for businesses that are having one eye over their shoulder, you sort of need to get with the times a little bit, because you may find yourself part of a sunset industry if you don't actually respond to those trends that Ezard talked about.
Yeah, Peter, that's right. And just picking up on your point, it's probably a good segue over to Darren, the call out for regtech firms. And I know Darren has been working at Arctic for 4 years?
5 now, Dad.
5 years now. And so he's been at the coalface as a regtech. And so I thought it was great that you accepted the invitation to join us today. Could you give us a little bit of an environmental scan on what you're actually seeing, and how many times a day you're being asked for ESG, and from which different quarters? So is it investors? Is it the institutions themselves, or where are you seeing this conversation emerge? So that's my question. My first question to you is, what do you see happening right now?
Yeah, certainly. So early days for us. We've started to think about it. Super topical, and as the panel have talked about, it impacts just about every part of your business. It's about our products, it's about our customers, our people, our brand, everything. So we've started to think about, well, what does a framework look like for us, and we're starting to see the impacts in a couple of areas. So we're certainly seeing some customer onboarding and sort of vendor assessment processes that are now asking questions of us in that regard. Like, do we have a ESG framework, objectives, etc., and are we measuring those? I would say at this stage slightly more out of the UK and overseas than in Australia, but I think that'll change pretty quickly. And it's not yet at the level where it's becoming a roadblock, but again, I think that will, the level of expectation will increase over time. But certainly seeing that as part of those questionnaires now, and I'm sure it will become as normal as an IT security questionnaire in the future, which we do for all of our customers. But it's definitely about opportunity, like for us, and I think a lot of other regtechs on the call that are either already got specific offerings in this space to assist their customers with their ESG frameworks, or you may have something that's very closely aligned, and there could be opportunity about thinking about, well, how do I reposition this to take advantage of the wave and ride that wave. Because I think there's definitely opportunity in understanding how you are helping your customers or your potential target customers with their frameworks and their objectives, and framing your offerings in that way will create enormous opportunity. And we're certainly seeing that from the investment side. Whether I think it depends on your scale and the type of investment you're looking for, but even the sort of high net worth and seed investors is a very high awareness of ESG as an opportunity, and lots of questions being asked around that space. As you start to scale up, the sort of corporate investors very much part of the conversation about how you can capitalize on that opportunity and with your products and your and your success as an organization, getting that sort of social and diversity aspects correct in your organization, or as good as they can be. So yeah, certainly starting to see the shoots of that in all of those areas, and I think it'll only increase over time.
Yeah, thank you, Darren. You've raised a couple of questions that I'll come back to you on, because I'm just conscious that I want to include Edzard in the first part of this conversation. So Edzard, I must say that before we had a briefing call, I hadn't really thought about the whole talent question and why do people care? Like, why is this important from a talent perspective? And you covered off a little bit of it in your presentation, but can you just help us unpack that a little bit more? Is it because what we're seeing emerging in the younger generation is that people have more sensibilities around, ESG in general, so they care about the environment, they care more about where they're investing their money, and is it being driven by that? Because we know at the moment that talent at the moment, especially in Australia, is there's a gap in our talent and the number of skilled people that we need. And I understand that people are being paid crazy salaries and things because the talent is so scarce. So could this also be another opportunity for us in how we reframe our organisations to attract the very best people? And so I was just wondering if you could unpack that a little bit further for us.
Yeah, of course. And I think BCG is a great example of where all of this comes together, because in essence, we're a strategy consultancy. So the thing we sell is talent. We go to companies and we deploy highly skilled people in specific areas to help drive large-scale change usually. And the only thing we make money on is deploying people at clients. So our key driver for success is how much talent can we attract, and how can we make sure this talent stays with us as a company so we can help other companies to drive the change they want to drive. And as a result, we see in our recruitment very closely how these trends are evolving. And I think you can, superimpose different ideas on why this is happening. There's a lot of talk about Gen Z being less focused on, creating financial security and more on, making impact on the world, all sorts of different theories that abound. There's all sorts of people that say that's totally wrong, it's something else. But the very practical thing we see is BCG internally always had a number of norms around which clients do we serve, how do we make sure we make the right trade-offs and choices in complicated situations, how do we make sure we we work towards more gender balance in an industry that's typically very gender unbalanced? And how do we make sure that we, over time, reduce our footprint, because there's a lot of flying involved in strategy consulting. And what we're seeing as those things were driven internally due to all sorts of factors, but we never really broadcasted them. But now we're getting questions from recruits around this. And I've noticed a tremendous uptick in the people that work in my teams that actually actively flag to their staffing, you know, I really want to work here, but I don't want to work for an oil and gas company. And that is something that just barely happened 10 years ago. So I'm seeing this trend and this shift in the people that I'm working with. I'm personally very excited by it because I think it's the right way to go. But I think it is partially because that lens of meaning and value and making sure that the business you work with is aligned to the internal values you have, and the fact that trends around environmental sustainability and social issues have just become a lot more present in people's minds and in the culture. And those two things are coming together to make this a really important topic on the recruiting front.
Yeah, right. Yes, I just, you know, because I honestly had not really thought about skills and talent, and I understand exactly what you're saying when you put it in your own, in BCG's context. I might go back to you, Stacey, because with all of these things, there's usually a bit of a burning platform, and somebody has to be demanding, demanding some of the questions be answered. And I know certainly a decade ago, it was some of the underlying investors of private equity funds and venture capital funds that were actually making these demands, probably coming out of the superannuation industry. Would that be correct? And can you tell us a little bit about how that drove some of what you've seen, and how that may now, in fact, you may then be driving that in what you're seeing in your tech investments, and what does that mean for one of your portfolio companies right now in practical terms, if you could explain that to us a little bit.
Absolutely. I mean, I think that obviously global institutional investors and in Europe, I think they've had a handle on some of these issues for a lot longer, but certainly the Australian super funds, it's very relevant to them. Over the last decade, I've probably had investor questionnaires which ranged from, you know, just a survey monkey of 10 questions. Do you have a policy, yes or no? And you never really knew that where that was going, as opposed to now when, as I said, we were fundraising Fund 2, and the due diligence that we are getting as a general partner and a private equity manager on these particular issues, where investors want to see not only how we think about it, but they want to see our investment committee packs of how we've addressed it in the IC meetings when we're considering an investment. So absolutely, we're getting pressure from our institutional investors that then impact on how we look at the portfolio companies that we're investing in. I should also say that, just on the flip side, that we're in a great industry in tech to make really big differences. You know, obviously the UN Sustainable Development Goals talk about health and employment and education, and they're all things that tech we can access through that. And for instance, some of our portfolio companies, we have a Micromine, which is actually a mining, offers technology in relation to mines, and that's something that people have asked us about. And to some extent, it's also about increasing efficiency. If you're not shutting mines down straight away, you still have to use them, you still have power. So it's also the efficiency that comes from the use of technology. We had ComplySpace, and again, it was sort of assisted compliance and the necessary legislation around aged care and schools. So I think it's a great industry to be in, not only of how we look at it and how we can improve it, but also what we can do in the ESG world and making those changes. Sorry, I think there was another aspect to your question that I've
It was
just
just about the drivers. So how has the
Gotcha.
superannuation industry or those big institutional super funds, how's that impacted the driver for the change in private equity and venture,
yeah, I
which will in turn start to drive, you know, some of your investments? Like, how has that had a trickle down?
Through a number of ways, I think. Sometimes there's definitely been a focus on including excluded assets on any of their side letters. They often wanted in their limited partnership agreements to either exclude you from looking at particular industries or to make sure that your the revenue exposure is very limited in those companies. They or they also they've got to answer their own members, and,
Yes.
and becoming increasingly important for their own members.
Mm.
So it's again, it's very connected that their members are putting pressure on them, or the legislative changes, and they're very mindful not only of sort of financial returns, but also good governance. And I think as was mentioned, I think it used to be that ESG or environmental or social issues were sort of considered, oh, that's going to hinder financial performance, when I don't think that's the case at all. In fact, I think it improves the financial performance for those people who don't intrinsically consider these issues important. I think there's the monetary side as well.
I think if I could just jump in, Deborah, I mean, I think just to echo Stacey's points, and, you know, I probably have some sympathy a little bit, because you've got a whole lot of what I'd call financial intermediaries, which covers the full spectrum of private equity firms, hedge funds, you know, more traditional asset managers in the US, mutual funds, superannuation funds here, and even financiers. I mean, they're effectively just looking to execute on the mandates they're given. So there isn't, in some respects, a lot of discretion, because, as Stacey said, the mandate will specifically say we exclude any entities that patently have poor corporate governance or have breached, whether it's AML CTF requirements or listing rules. Likewise with the mining sector, and there's certain types of mining activities that's clearly destructive to the environment and is not socially responsible. So it's a bit of a case of don't shoot the messenger. And I think this is also where, you know, a lot of companies are sort of really struggling to get their minds around this, because, again, in the past, it's moved from a bit of a discretionary, I wouldn't say nice to have, but you need to have had, you know, a board or a management team on the investor side who are passionate about the cause and trying to, you know, create a point of difference. But I think, as Ezad showed with the flow of funds, I mean, the point of difference is becoming a little bit harder, because there's wall of money coming in for, you know, ESG, sustainability, impact investing, and there is a continuum in itself to look across here. It's more about how do organisations get themselves organised to this new world that they're in, and again, I think it's partly trying to, you know, pull apart, you know, what parts of your business can benefit from this, what parts need to be, and I use the phrase remediated, but if you have poor practices that are not ESG friendly, and the good news is that, you know, corporations have been given a bit of time. A lot of them already made good progress anyway, so I don't think anyone is saying that, you know, it's binary. If you fail today on all measures, you're out. But certainly investors and financiers want to see a transition to a better ESG and sustainability profile.
So, Darren, this is a bit of an unscripted question, so I'm sorry if it's putting you on the spot, but I'm just wondering, so does this mean that, you know, would you be recommending to other RegTech firms that they have part of their pitch deck dedicated to this going forward? It's an unscripted question, I'm sorry.
Yeah, I think I do. I would say that. I think the starting point, and I can share a little bit about how we started, if you like, after a similar sort of discussion and session like this a few months back. I went away, and Stacey mentioned the UN Sustainability Goals, development goals. I use those as a base, and there's a lot of big organisations out there that have, you know, publicly available statements that include, you know, their sort of targets and measurements against some of those goals. And I'm not saying that's the only source. You know, there's a lot of others and a lot more to it, but that was useful for me just to frame up, okay, what are the things I should be thinking about under each of the E, S, and G, and then actually how do I think the business kind of holds up against each of those, and it was very positive in some ways. You know, like, you know, as I said, like, we're in a technology sector, so actually, you know, not necessarily going to have a huge climate impact, especially if you're a small business. Biggest area, as Edzard mentioned, is probably travel, and we haven't been able to do that for 2 years because of COVID. So it actually, you know, wasn't too bad. And then you start looking at actually what are the products and services we offer in that space, you know, and we're in the financial crime space, and so, you know, we're trying to limit the impacts on society of those sort of risks and those you know, bad things happening in the world. And so you're actually making a very positive contribution in those regards, and I think you should be talking about that, and you should be positioning it, and you should be shouting about it. And I think in the social, you know, in the governance side, it was a good sense check just to say, well, actually, what sort of things should we be thinking about to then, you know, set goals and targets for future recruitment and development? What framework should we have in place as an organisation, even though we're small? You know, there's certain, you know, ways we can have the right structures, governance in place, and you know, and practices to manage those side of things. And so, yeah, I do. I think all of those play strongly to the brand, and I think increasingly investors and customers will want to see that. I think, as I said at the start, I think positioning it for customers is slightly different. You've got to understand how you're helping their frameworks and their objectives, but that should be part of your sales pitch deck. And if it's an investor pitch deck, absolutely, because it's going to become mandatory in not too long.
Yeah, thanks, Darren. Because I think from initial stages, if you're a RegTech firm on the line today, to look at this, there are 17 sustainable development goals, and you can go and look at them as a kind of an easy to digest, colourful framework of different goals around different different things, and you can, they're published on the website. Just you can Google sustainable development goals and that will come up. Go and have a look there and just see how you kind of think, just top of mind with a blank sheet of paper, which of those are part of your solution that you are offering to institutions, and then go have a look at their websites, because I'll be surprised if they don't make some kind of statement around goals of some description. And if it's not the SDGs, it'll be some other framework that they're using. And then see if you can use some of those threads in your next conversation, because you may be able to completely change the trajectory of your conversation with people in large institutions as you approach this. And so I think that is the amazing opportunity that RegTech has. That is not to be selling software, but actually to be selling to institutions enablement tools to help them achieve their goals. And they will all have goals and targets that have been set, and they will be articulated. So it should be pretty easy for you to actually work out where you were sitting there, not only as a business making a commitment to that in your own right, but also then how you're serving your customers. So I do think that there's a fantastic opportunity there. But actually, that's a really nice segue into a question that I have for Edzard, and that is around, so we've talked about the Sustainable Development Goals, and there are other frameworks, but are there standards for ESG? Are there standards for ESG is my first question, then I'll ask you another question depending on how you answer that.
Well, I think I'll answer in the specific with an example here, because that ties to the conversation we've just been having, which is there's lots of different frameworks that are used more broadly to measure ESG. And if you go into the very particular, into a subset around environment, say talking about climate commitments, what you're seeing is you have these very high level general frameworks that can help you assess things, but you need to go into the really nitty gritty to make very specific statements. So what you're seeing around investments, for instance, defining exactly what the carbon intensity of an investment footprint is really complicated to do well. And you're seeing a gradual formalization and standardization globally around this. So you, for instance, have the TFCD, which defines exactly how you can report on your carbon intensity internally. But then you've got, like I mentioned, the Net Zero Investment Alliance and the Net Zero Asset Owner Alliance, who have working groups that are gradually, one by one, releasing standards and norms around how to measure the carbon intensity of different investment types. And then if you get to more specifics, because, you know, it's all about the specifics. If you take, for instance, an insurance company, they have an underwriting footprint. And the question is, how do you measure the carbon intensity of your underwriting footprint? So there's actually work going on now in the Net Zero Underwriting Alliance to define norms around how do you measure the carbon intensity of your underwriting footprint. And actually, if you go to each of these major overarching themes, environmental, social, and governance, there's the work being done to make this specific for different industries. So you've got overall frameworks enough, but it's really getting into that granularity, what you're seeing that is happening right now. And you're also seeing an UN-related umbrella organizations working on this to allow for global standardization. Right. So we're coming from this place where we have the more generic frameworks that are non-standardized often between different businesses to a trend of global standardization. You're also seeing this for biodiversity, for instance. There's also the TFCN, which is the reporting framework around what is your impact on nature, which is being standardized right now. Anyways, lots of different acronyms. But what this links to is actually that commercial opportunity, which you just mentioned, which is once you go from generic, vague statements as a corporation around we want to be a good citizen to very specific commitments like we want to be net zero by 2040 in our underwriting portfolio, which is something that, you know, various global insurers have been pronouncing. You're getting to a point where you need to start to prove that. Otherwise, shareholders can sue you because you've made a public commitment around this. So what I'm seeing in the background as we're having conversations with banks and insurance companies, which is my core focus, is some businesses are charging ahead and saying we're making these commitments even though we don't have the formal data to show what we're doing right now, because we will invent that over time. Others are really concerned about doing this because they say, how can I commit to something without having the data and understanding what my current footprint is? And that's really that gap where there's a commercial opportunity, because businesses are crying out to get clarity around the standardized norms that are being created and how can I report on those and what is my actual footprint on these different topics and how can I drive progress there? And how do I do this in a complicated regulatory environment where there might be different standards on how things are measured in different countries and different norms? And that space is, there's just a massive push in large corporates around this area. And there's a gap of capability and there's a gap of data that they're seeking for people to fill. And that, I think, is that commercial opportunity that I was talking about earlier in the presentation.
Yeah. And my question was going to be about that commercial opportunity. So you answered that well.
If I could also just jump in relation to the frameworks and the different, I think there is something lacking and it could be a huge commercial opportunity in terms of sort of a tech focused framework. Obviously there's the SASB framework and they've got standards for different industries. So they have standards that relate to software